The Maruti numbers are out. Sales figures 99950, almost 10,000. I don't think that is a disappointment. Now let's just wait for the profit numbers to come out and see what they have done. Total sales are round about at the levels that we were talking about. We were expecting a PAT of 660 crores. 632 crores, so marginally lower, maybe a 5% lower than what we were working with. It is still a healthy growth, mind you, 632 versus 423, which would still mean that they've posted a PAT northwards of 50%, unless my math is very wrong. So they've done extremely good on the PAT front. It is marginally below estimates, but a good set of numbers delivered. Top line in line, bottom line maybe 5% off, but you would hand it to them. I mean, 50% growth is no mean feat in a scenario like this. It was expected, yes, but they've done it too. Now, whether or not the margins have come in at around 11.5 or 12% remains to be seen. My guess is that it would be around that mark, 11.5 to 12%, with the EBITDA coming in again, showing almost a 50% growth. So, a good set of numbers. Maybe the PAT is marginally below estimates, but no surprises out there. 9,995, so almost 10,000 crores versus expectation of 10,025, so that's in line. And PAT number 2, just marginally below estimate.
Passenger car sales continued to decline and posted a degrowth of 10% in the first quarter, while the growth in the utility vehicle segment came down to 5% from 36.4% in quarter 4 last year. Overall, the industry declined by 7.2% as compared to same period last year. The company's decline in sale was in line with that of industry, with market share constant at 40.3%. A weak market demand scenario had to be supported with higher sales promotion expenses to partially offset customers' increase in cost of ownership. The company organized a number of sales events in urban and rural areas in an effort to reach out to potential customers and create an excitement in the market. Rural sales continue to do well and posted a growth of 19%. A normal monsoon this year should have a positive impact on the crops, helping rural sales going forward. Export sales were impacted during the quarter due to weak market situation globally. The company is working on expanding its presence by launching more models in its export markets. Rupee depreciation helped export realizations, but the benefit was limited due to fall in volumes. During the year, various cost reduction initiatives like focus cost out, localization, value engineering helped the company improve its operational performance. These initiatives and localization efforts will further continue into the year. Yen rates improved as compared to the same period last year. The movement positively impacted the cost structure and brought down the cost of imports and payables in yen. Quarter 1 also includes the benefit of the merger of Suzuki Powertrain India Limited, a supplier of diesel engines and transmissions to the company. The result of the quarter 1 of 2012-13 reflect the financials of the company before the merger. For the quarter, net sales stood at 99,951 million, a decline of 10% as compared to same period last year, and profits after tax stood at rupees 6,316 million, a growth of 49% over the same period last year.